Millions of people who have wonderful pensions. You know what? There's some legislation that's coming, or that already came in 2014, and the Department of Treasury is about to make a decision that could have an effect on people in pensions that might not have a lot of longevity within the money. Now, we've got this wonderful video from MSN, and we're going to show it to you here for a moment, and then we have Bruce McPherson, who's going to help us with some solutions.
It's an amazing report. Graphically, you lay it out like an iceberg, right, where the ice we see are the numbers we know, and everything underwater is the stuff that doesn't get reported.
Right. That's one of our recommendations, is that people should publish, governments should publish the actual numbers. They should find a way to compare apples to apples so that people understand that where they think their government owes 44 trillion, or those 20 governments combined, they actually owe 78 trillion. So think of it like this. Imagine if your mortgage was $440,000, and then the bank called you up and said, well, actually, it's $1.3 million. And that's why we have the hidden part of the iceberg, trying to show people what's really out there.
Now, one of the big things you saw in that video is you saw the gentleman talking about the underfunded liabilities of pensions. And what a lot of people don't realize is a lot of these companies had a large number of employees, and that number of employees has dwindled now that are actually funding that pension and not enabling that pension to be in a position where it's consolvent for the long term. For example, the truckers' pension. Okay, there's multiple state truckers' pensions that are only going to last another 10 or 12 years. And in 2014, there was legislation that was passed that enabled the pension managers to actually cut pension benefits, meaning payments to pensioners, if the pension could be insolvent in a certain period of time. So it's one of those things where it's saying, hey, look, we're looking at the longevity of the pension so you can have money for the rest of your life, as opposed to having it all of a sudden stop in 10 years, which could be very detrimental to people. And this is a big problem, and people are going, hey, what do I do? How do I handle this? One of the solutions are, if you know what's going to happen from a planning standpoint, as a financial professional that I am, I encourage people to figure out what they're going to do if in case that occurs. For example, there's truckers. There's about 250,000 of them. They're truckers, they're families, they're retirees that could be facing this as early as June. So when you take a look at it, saying, gosh, if I don't have much time, what can I do? Or if I do have time but I don't have the assets, we have Bruce McPherson of Retirement Funding Solutions with us to help us explore one of the options. Bruce, welcome to the show. This video and the reality of this pension situation is actually very scary.
It is.
Okay, but it's not the time for people to panic. I believe it's time for people to take action and not wait till the last second, because the reality is, either in that trucker's pension, the money's gone in 10 years, or they're going to have to reduce the benefits, meaning the amount being paid out to somebody, and it'll last a lot longer. How long, I don't know. So, you know, one of the solutions that people have, or options to resolve this, is to look into a reverse mortgage.
Absolutely. And the reverse mortgage, it's such a flexible program, the way the government designed it when they created it way back in the Reagan administration. And because of its flexibility, it can be used for a lot of things. And this planning for future needs, such as planning for the loss or reduction of a pension, is one of the best, most strategic uses of a reverse mortgage, because you don't have to wait until you get the reverse mortgage, wait until you've lost your pension and then go and try to qualify for a reverse mortgage and hope that the HUD formula at that time allows you to qualify for a large amount of money. What you can do is get a reverse mortgage today. You'll qualify for the most money possible because interest rates are so low, and interest rates play a big part in that HUD formula. And you can structure it as a line of credit. In other words, you don't have to choose to receive monthly payments. You don't have to take a lump sum. You can choose to leave the money just sitting available as credit that's federally insured. And what's amazing about the reverse mortgage is actually really three things. So number one, you never have to make any monthly payments, because all principal and interest can be deferred. So you're not giving up title to your home. You continue to own the home, but your heirs will not inherit as much equity as they otherwise would. And it really depends on how much you choose to borrow from it down the road. But the other amazing thing is that this credit line is federally insured. It can never be frozen or arbitrarily reduced or taken away, even if home values collapse, even if we have a repeat of 2008. And number three, this credit line grows with compounding, its compounding growth over time, month after month, year after year, as long as you continue to live in the home, and this growth is not tied to future home values. So even if home values fall, the growth continues. Right now, the growth rate is around 5.5%. That's compounding tax-free growth of a federally insured line of credit.
So what you're saying is, if I were to get a reverse mortgage today, and my balance, what's the maximum balance?
Let's say it's a $500,000 home value. You could qualify for, it's about $250,000 line of credit.
$250,000 growing at essentially 5.5% interest rate. It's going to be about 12 or 13 years before it doubles. Is that about right?
Yeah, it's about right. And 20 years later, it would be at least $800,000, or potentially a lot bigger by then, because if interest rates go up, your credit line growth rate also goes up.
So that means as long as I'm not spending, this balance goes up. Nobody can take it away from it, and I can get into it, even if the value of my home drops below $500,000.
Exactly.
Okay, so from a planning standpoint, this is very significant, because if you know your pension will most likely go away in 10 or 15 years, it makes sense at looking at a reverse mortgage now.
Yes.
Or looking at another opportunity for the other assets that you have that could provide that. Now, moving into it as well, couldn't somebody, if they thought, hey, look, I might need this money, my pension's $1,500, why don't I buy a home with a reverse mortgage and not have a $1,500 payment?
You could do that too, absolutely. A lot of people don't know, a lot of realtors don't even know, you can purchase a home and finance that purchase by getting the reverse mortgage on that home as you're buying it, instead of getting a regular purchase mortgage. So now you've just bought a home without having to be a cash buyer, and pay, maybe roughly half of the home's price, and the other half is provided by the reverse mortgage. And then from the moment you buy that home till the moment you pass away or sell your home, you never are making any monthly payments unless you choose to.
And just to be clear, because this is a big thing, everybody says, Steve, I'm worried about a reverse mortgage because the bank gets the home. Is that true?
Nope. That stopped being true in 1989 when the government created the federally insured reverse mortgage program. Okay,
great. Now, one of the big things I want to tell people, and I want to focus on what Bruce has said, that is an option you could utilize, or a great strategy to deal with this pension issue, because the reality is there's going to be more and more pensions that aren't able to sustain themselves, just like Social Security. In fact, in 2039, if there's nothing done to Social Security, it'll drop 25%. That's very significant in people's income. And the same thing could happen to pensions. If you were part of Delta or Delta Airlines, you would have known this, because your pension got dropped 2 or 3 times every time they went through bankruptcy. But you have to have a mechanism. If you have rental properties, great, you're replacing it. If you have investments, you can figure out the money to replace it. But if you don't have those things, a reverse mortgage is a wonderful solution. Now, that's the reason why you want to get more information from Bruce McPherson at Retirement Funding Solutions, or go to the Silver Hair Tsunami website and get more information about a reverse mortgage as a possible strategy to help you with replacing that income that you lost either from a pension. So stick with us. We've got more to come, the Mortgage Minute, as well as Wayne Dunlap.